Alright, hello to everyone and welcome to a new video. As the name implies, this is the 5 steps I use in trading with time and price. Now, as you know, if you're in the GlobalTraderClub, then we've got time and price, pre-calculated swing days, pre-calculated swing hours, and our technical analysis. And then that's the trade. But if I was to put it in a routine, and it might help some of you who are new to the club, let's take a look at what we really can help you with here. So let's go with this. The 5-step daily routine. Now, first of all, I check the news for the whole week. And the reason we do that, as you know, is not because we want to know when the economic data is really coming out so we can trade the news. We are not trading the news. We are trading pre-calculated swing hours, which may help us coincide or align with trading news. Okay, so I'm going to show that in a minute and we'll demonstrate it so it'll be clear for you. So we're going to check the news, and normally I just check it from here, and I've got last week in front of me because we can go back and check how those setups happened. Let's go back here. Alright, so this is, let's take a look at that last week again, 24th to the 28th. Let's apply that, and this is it. Alright, so let's get rid of that. So as you can see, that's 4:45. There are 2 sets of news coming out on a Monday. Let's see what we had. Now remember, because we're using our pre-calculated swing hours, we want to see if there is a time, before or after the news. If there is a setup according to our trading hours before the news, that could be a good setup to trade the news. Okay. If I've got an hour after the news, that's also good, because according to that is probably where I'm going. So if there's going to be a news coming out, for example, there's news coming out at 4:45, and the next hours I've got after the news are 6 to 7. So the market will probably go in that direction, whichever direction that's going to be, up or down, whatever you're trading, okay, because different assets will go in different directions, some up while others go down, and other way around. So until 6 or 7, I've got actually a good time period. I can trade, or I'll just say, you know what, I'm going to wait for this hour. I'm going to wait for this hour, and I'm going to trade according to my time and price when we get to 6 to 7. Why? Because that's the time when the market should turn. Will it? Let's take a look. Now, normally I do use MetaTrader 4, and sometimes it does give me a bit of a grief. The reason I use it, you don't have to use it, by the way. The reason I use it is because my PST indicator, the one you see at the bottom here, gives me pricing at the top here, and I get the weekly, monthly, daily, intraday pricing off there. And when price matches time, that's, like, for me, is a golden opportunity to get into a trade. Okay, but you don't have to use it. Sometimes it does freeze the MetaTrader 4 platform. As you know, MetaTrader 4 is a bit slack, but you can use MetaTrader 5, as you can see here. I don't have a PST there, but it doesn't matter if you're using your technical analysis. You can use other brokers. This is interactive brokers. Let's go into here. So I've got SP 500 here, for example, ready for a setup, and we'll see how this thing pans out. Or you can use TradingView. As you can see, I've got Google here, I've got gold here as well. So it's the same kind of thing. But if you're not using the PST, if you're not using any of the techniques that I'm using, and you go your own sweet way, that's all fine. Let's take a look at that 4:45 on a Monday. So I'm going to break this down into a 15-minute chart, and not a 15-second, not a 15-second, a 15-minute chart. There we go, 15-minute chart, and then we'll see how that thing panned out. Now, as you know, my hours are UTC plus 3. Okay, so let's see. We want to come to the 24th, which is there. So I'm just going to do this and mark it in. Do I have a vertical line here? I do. That's your 25th, 24th. Where was that? 6 o'clock. 6 o'clock. There's your 6 o'clock. Okay, and then there's your 7 o'clock. Let's mark that 7 o'clock as well. Okay, Monday 24, 6 to 7. So 6 to 7, all right, 6:45. Let me move this one more there. So that's 7, right? So you can see that. 6 to 7. This is the time when you want to be looking at the market and you want to see if you're going to be a buyer, if your direction is to the upside. Now, let's take a look again at our swing days. Now, Monday the 24th was a swing day for gold, right? So Monday is a good day to trade. We're expecting a turn in the market, and then we're looking at the hours. This is New York, right? So this is New York morning session, when we can get in. Obviously, any additional comment there you should take on board, because it's kind of like valuable to see if there's any information there, because sometimes I say the market should go, for example, possibly move until like 9 to 9:40, right? That's a Tuesday comment I made. So what you want to know is, after the news, where can you trade? Because these are after, right? If I had before the news trading hours, then I'd look into that as well. Well, should I buy here? Is it a good level to buy? Am I on a swing day? Is it a swing day? Is it a swing hour? And is this a level where I want to kind of like go long, right? So this is why we're checking the news. I'm not checking the news for anything else. I don't care about what these actual data is, because the trading hours for me, they work. So I'm not running after the news, but checking the time to kind of align my trading kind of like works out. And then you can say to yourself, well, here we are, that's gold, and you can kind of like do that and flow with it. Monday being a swing day, we're at the lows. Why? Because the market did come down a few days, and from here, as you can see, it's just going up all the way into Friday and so on. All right, so that's how this is the only reason, and this is only how we're using the economic data. So let's take a look at the next thing. So the next thing is, do your technical analysis. All right, so once I've got the hours in front of me, then I'm going to look at my technical analysis. Now, you can use any technical analysis you want, really. And here as well, I just put on here, I'm just going to get rid of these, okay? And I put on here, as you can see, just simple demand and supply, okay? Now, if I know Monday is a swing day, let's turn this back into days, or let's do 4 hours. Maybe it might be kind of like showing us a better kind of setup. Here is your 24th, right? Once again, I'm going to demonstrate this vertical line, and this is the 24th, probably here somewhere, right? 24th of, yes, exactly. So this is the 24th starting there, okay, and that's basically it. So this is your 24th and going into 25. So Monday is a swing day. The market is coming down. It comes down to our trading hours, as you can see, and then kind of starts pushing up. Now, when I'm doing my technical analysis, the only thing I want to really, check for myself, there are a few things I'm meticulous about. One is my retracement level, 37.5. I like to look at that. The second thing is, where did the market buy or sell heavy? If they bought somewhere heavy, if they sold somewhere heavy, that's for me a place of interest. The third thing is, do I have a formation? If I have a formation on a daily, or I don't know, whatever time frame you're using, it doesn't matter. Whatever technique you're using, it doesn't matter for timing. Just match it to your timing and trade it. Okay, that's the beauty about it. Then what I'm looking for is formations. Is there a formation? So the market maybe didn't pull back into my 37.5, but can I check a formation? Worst case scenario, if I'm looking at something like, and it's a bit blurry, I'll try to count the main structure of the wave. So I use 5 different techniques in technical analysis. So I'll kind of like look at what's going on. So my technical analysis can be from a few different perspectives, but that's actually an advantage for me because it gives me a good kind of setup. But let's say it gives me the kind of a good setup from a few different perspectives. That's why I like the way do technical analysis, because I get to cross-check a few things, confirm each other, and technically then I say to myself, okay, technically this is it. Now the next question is going to be, the timing or whatever. So the next thing, technical analysis. Once you do your technical analysis, there are 3 steps in my technical analysis. One is I need to determine my direction. Am I going to buy or sell? Okay. Once I decided if I'm going to buy or sell, I'm going to have to identify a potential trade with entry, stop, and targets. And this is something I show like pretty much on the daily videos every day. So whenever I have a setup, let's say this is like this is the daily on gold, right? So for example, today I did say if it does pull back into a trading hour, I would like to go along with it. Let's just press this button. It's driving me nuts. Okay, why? Because it's kind of like going up, right? It's a runner, as you can see. If you've taken from me technical analysis, you can see this is runner. It's running up, so we're going to go somewhere. And it's not a swing day today, but if it was a swing day, then I'd say to myself, well, we're up somewhere, so we want to look for an intraday sell possibly. Okay, despite the fact that the trend is going up. And I often say if the trend is going up and you're kind of against it, don't go heavy. But a swing day on a high, I don't mind taking that trade if I got less risk to take, because I don't want to be going against the trend. Or if you're like feeling a bit worried about going against the trend, that's fair enough. You can wait for the pullback. So this 15-minute chart, what we'd like to look for is places to get in where they bought heavy, that caused the breakout. Bought heavy caused the breakout. Bought heavy caused the breakout. So as you can see, this is just straightforward demand. Okay, demand supply, and that kind of technical analysis works out fine. If the market doesn't go any higher, and if we just muck around here, I'm definitely going to look to short it by the next swing day. Okay. If it doesn't go any higher, I'll just draw that as well. And then if it comes back into, it's got a 38.2 here, but I don't use 38.2. I'll just change that for your benefit. I use a 37.5. Okay, for me that's the golden thing. Ratio 37.5, 37.5. Okay, there we go. And I'll also look for this zone here. Obviously, if there's a gap here, we'll keep it in mind, and so on. So what does that mean? Well, if the market comes back into my trading hours, for example, today, what are the trading hours here? What's the 31st? So I've got my big mother of all books with the timings in it. So I'll take a look at it today and say, okay, let's take a look. We've got in the New York session, I've got 425, so I'll put that into 425. Let me just double check the timing as well. 11:11, so the server is still my time. That's good. If you're using a broker and your timing, just make sure your timing and your broker and your country location or whatever is like matched up, because you don't want to be putting 5:15 here when your local time is like some other time zone. So those are the hours I want to be looking into, and I know from 5:20 to 5:55, let's say 6 o'clock, is a bit tricky, so I'm going to keep an eye out for any sudden moves during that time period. Okay, and then I've got 7:30 to 8 o'clock. Now if 7:30 to 8 o'clock market move into that direction, into 7:30 and 8, it's probably going to carry on. Okay, and if it does, it should carry on into 9:30. So knowing that is an advantage for me. If I enter a trade and it goes in my direction, it could head into 9:30. Now this is not just for gold, this is also the same thing for whatever you're trading. If you're trading euro dollar, it's going to be the same thing. Let's get rid of that. Let's take this to the end. It's going to be the same thing for the euro dollar. Okay, so with the euro dollar, as you know, we're bearish from these high levels. Okay, as you know, I marked these levels in like a few weeks ago, and I did say, guys, if we're up here, it's a swing day, you want to sell the highs, you can. Okay, and this is, you know, it's sold off, and so on. All right, so we don't want to be buying highs, we want to be selling the highs. And last week, as you know, is this an arrow? Yes, it is. So Thursday, I did say we could push up on Thursday. All right, the reason I said you could push up on Thursday is because last week was weird. We had Monday, Tuesday, Wednesday, Thursday, so we booked it in on the last day at a PST level. Okay, so understanding the swing days, understanding direction, understanding where we want to go is very, very important. So you just want to make sure your technical analysis is right. Once you identify your potential levels, your stops and your targets, then you got to ask yourself the question, is it going to be worth the risk? If it's not worth the risk, don't take the trade. Look at something else. Okay, just look at something else. A lot of the times I see people just trying to pressure themselves into a trade. You don't have to. Okay, if you're trading euro dollar and there's nothing happening, okay, you can go to, I know, you go to SP 500. You can say, you know what, I'm going to wait for this and I'm going to check this out. Now for SP 500, today is not a swing day. Okay, it's a swing day today for Dow Jones and Nasdaq, but for SP 500 it isn't. Okay, so we might have a little bit more room to come down. We don't know, it might be a little choppy, but we've got pricing for it. So if I understand, let's say we understand that the market is going down, remember, and also if you think about it, remember last week on this one, Thursday was a swing day, right? So this is our Thursday. Market went down, and remember that's the impulse, and that was the flag formation that was happening, right? So what did we do last week as well? We just matched our technical analysis. Okay, parallel, here we go. All we had to do was just match the parallel lines, and I did say this is like a channel, so all we have to do is, there we go, is sell the high. Okay, and that was your Thursday swing day, market going boom down. All right, and we're expecting lower lows, right? So we're expecting the market to go down. In fact, I'm bearish till like pretty much the end of summer, I guess. We'll see how things go. But because we're day or intraday trading, it doesn't matter. If it's a swing day and I want to buy on a swing day, I can do it with a smaller lot size if I'm going against the trend. But if you're psychologically not okay with that, fair enough. Then all you have to do is wait for the next swing day on the upside and push it down. But the whole idea here is, what I'm trying to say is, get your technical analysis done according to what your technical analysis is. Draw your lines, measure your lines, I don't know, whatever you do, okay, and just calculate these. These are going to be important. Sometimes I hear people saying, look, you know, I don't have a risk return, I see profit and I get out. I don't trade that way. If it works for you, great. You know, I never recommend such a thing because I like to see what my potential is in any business deal. Okay, so same here. So if we have a good potential with a PST target or a technical analysis target, as to whatever your technical analysis is, you should be able to see a target that the price wants to get to. With the PST indicator, like, I'm always checking the targets because it sniffs it out. It's just sniffing around and it goes there and it touches there. And if I want to take a reversal as well on a swing day, like we did last week on the euro dollar, that's exactly what we're doing because the market's coming down. I had 4 swing days. That was a very unusual thing for any asset because we're already intraday trading, and our swing days are not big swing days. We're trading for the intraday. Okay, so within the week I want to know the days where the market is going to do tops and bottoms so we can swing, or it's going to do a breakout. So, you know, they're not major swings, but they're enough for us to take a good chunk during day trading. And because SP 500 are also was also like at a high after a impulse wave, it matched our 37.5 retracement. It matched that channel top that we did. It was a flag formation. It was just good to sell down to follow the trend, so it was no big deal. But you know, the important thing here is to do your technical analysis. Okay, Now the third thing, is get your timing down. Now if you are already in the club anyway, you don't have to worry about that, because all your swing hours until the end of April, they're already in there. And you know, this is last week, as you can see, so all the hours are already in there. So all you have to do really is get onto your chart and put it into a 15-minute chart like I do when I demonstrated, and you know, put in the hours. Let's see, what did I have for Monday 24th? Let's take a look at that again. 9:05, 6, 7, 9:15. So I had 9:05 on the 24th. Let's get to the 24th just to do it quickly. So we're looking at 9 in the morning. That's your 9. That's your 9:05. Okay, so the market's pushing up on the 24th. Then I had 6 to 7. So we've got 6 on the 24th. Whoops. This is your 7 o'clock there. Okay. And so 6 to 7, this is where the market is, 6 to 7 down. Whoops, another 2 bars. There we are. Alright, so that's your 6 to 7 o'clock zone. And then what did I have? And then I had 9:15 to 9:40. Can push to closing from here. So 9:15 to 9:40. Let's check them out. Oops, this is 9:15 here. Okay, 9:15 there. Let's make this a little bigger, otherwise we're all going to go blind. Okay, so that's your 9:15. Alright, and then 9:40, it's kind of pushed up. 9:40 is on that bar. Market pushed up from there, going sideways into closing. When is the closing? There's the closing for you, I guess. Here it is. Okay, midnight bar there. Okay, so as you can see, the market kind of picked up here, and then the next day, as you can see, that's the 25th happening. So understanding where the market is going to turn around if I want to be a buyer. Remember, with the euro dollar, we want to sell. Okay, so if it doesn't match my hours, what do I do? And should I be selling here just because it's the hour? No, of course not. Why? Because you're looking at where the market sold before, remember? So you got a big wick here. Let's take that big wick. So that is your big wick. So if the market was here, okay, at a trading hour for us, then it's a bingo trade for us. If you want to just go technically, you can, but I don't. Okay, I wait for technical and I wait for the hours, and that's how I trade. Okay, but why? Because the hours have proven to me very valuable. So knowing the hours for me is just like a very, very important thing. It just double confirms everything, and my stop losses are really tight. So whatever you're going to be doing then is simply going to be, where is that document? Here it is. You're going to identify if it's worth your while or not, and you can just take it with the time. And if you watch the daily videos, if you watch my weekly wraps as well, you can see, you know, I think those videos are valuable for the club members, especially when you're using time and price, and those PST levels that I show you all the time. So it's a PST level, it's a swing day, but it's not there yet, so let's not do it. And see how the euro dollar just sizzled nice and easy all the way into Thursday, which turned into a swing day plus a PST level, bang, at a trade hour, and the market just took off. Also on Friday as well, going in that direction. So matching it is the way to go. So if you want to, you should do some kind of a routine for yourself, but this is according to how I do it. So this is pretty much the Global Trader Club signature. We check the news to align it to our trading hours. If that's the case, we do the technical analysis, we do our timing analysis. Is it a swing day? If yes, okay, great. Where are we? Is it matching a price? This is why we got the technicals. If it is matching a day price kind of thing, great. What about the hours? So we want to align them together as well. And then you got to, obviously, technical analysis requires you to make a plan, which is your second phase of your technical analysis. You plan the trade, and then you trade the plan, okay, and then you manage the trade and you journal it. Okay, if you're using technical analysis and timing analysis, it's worth writing down what kind of a setup worked out for you, and you know, that's also good to kind of like keep it in your data. There are a lot of Excel spreadsheets out there for doing money management and journaling your trade. So have a bit of a research, see what works for you, and that's how it is. Obviously, trade if your risk return is acceptable. If it isn't, you don't have to trade it. Just, you know, go for something else. As you can see on my MetaTrader 4, if I put it up here, hopefully it'll come up. Here we are. You see I've got gold, euro, dollar, SP 500 all on one profile. Okay, so if I'm looking at a setup and I say to myself, oh, this doesn't look too good, all right, or let me just check if something else is better looking with time and price, then, you know, just trade that one. You don't have to necessarily trade one thing. This is why I've got one metal, one Forex, and one index on the same page, and check it out. Other than these three, I rarely go and trade something else, despite the fact that Dow Jones sometimes can be really, really good. I like Dow Jones because it works really good with timing and PST. It does. So does SP 500. SP 500 and Dow Jones work really well together. With the SP 500, I can trade the mini as well. So it's all good. Sometimes because I'm going against the move, then I'll say, you know what, I'm going to trade the mini. I'm going to, you know, cut the lot size down because I'm going against the move, and so on. But basically, these are the steps. Hopefully that helps. If you're in the club, just have a routine for yourself, something like a checklist. You can say, okay, I did this, I did this, I did this, I did this, I did this. So you got a checklist, so your routine is fixed, and this is called a framework. And for me, this is the Global Trader Club framework and daily routine. So I hope that helps. All the best. Have a great week.